Hey guys, welcome to episode 21 of the F.I.R.E Fund Friday series. We had one heck of a week in the markets, up and down every other day until Friday where everything just hit the fan. But we are buy and hold dividend investors, so it was all paper loss, mostly. It could have been an ugly week for me, and I did take one loss from my options trading because I was not in the right state of mind, but things could have been much worse. Let me show you my trades and more in this week's update. So if you're ready, let's get into it. On this channel, I talk about all things finance, wealth building, and how you can achieve the life of your dreams through financial independence. If you want to join me on this journey to financial independence, go ahead and hit that subscribe button. Alright, let's start things off with some options trading updates. I technically lost my put credit spread trade for the week, but I do have a rolling cash secured put that managed to give me a net profit of $71 for the week. Let's break this down a bit. If you were in the markets this week, you guys know that it was up one day and down the next, with wild swings in either direction. I knew it was going to be a bad week to trade, so I wanted to stick with cash secured puts because I trade QQQ, so I can get in and roll out of trades relatively quickly without tying up my collateral for months at a time. Being able to roll my trades saved me this week for sure. Every time I roll out a trade, I unlock some of my collateral, so I've been using the cash to purchase more shares as well. As you can see in the debit section, I rolled my QQQ trades 3 times this week already. This cash secured put contract is now expiring in the next 2 weeks. I hope the market will stabilize by then, but I am watching it closely every day. And if it continues to nosedive, I'll just keep rolling out the expiration 2 days at a time to lower the strike and get more of my collateral out. You also may have noticed something new in the sheet. I made a SPY trade for the first time. SPY and QQQ are very similar. They're both indexes. While QQQ contains the NASDAQ 100, SPY is actually the SP 500. So they move very similarly. I put in a small SPY put credit spread for $300 of collateral, but I had to get out the next day because the market was falling hard. I can't seem to roll out my credit spreads, so I just get out once I lose a certain amount of money. That trade lost me $87, but my QQQ trades still generated enough premium for me to end the week with a rolling net profit of $71. I was definitely luckier than last week because I walked away in the green. I hoped for a break even on those SPY trades, but if I hadn't gone out when I did, I would have lost all my collateral. So when you are trading, risk management is a very, very important part of it. You should never risk more than you're willing to lose, and you should know when to get out of a losing trade. In my SPY example, the max I could have lost was $300. But I saw where the market was going and I knew this trade was going to go against me, so I just cut my losses early. You have to be able to adapt to changing market conditions. As for my QQQ trades, I will continually roll out these trades and reduce my strike until I get out at a profit. Cash secured puts is my absolute favorite way to trade options because I can easily pivot and recover from losses. I'm hoping I can get back into the right state of mind by Monday so I can possibly get into some credit spreads, but I will probably only be trading one contract at a time for the next few weeks. Like I said last week, I'm going to take the small wins because they will compound over time, and consistently profitable trades is what will make you a successful trader. I do want to make some videos showing you guys step by step how I execute my trades, but I don't want to just post 1-minute videos. Maybe I'll try out that new YouTube Shorts feature. Also guys, if what I'm showing you looks or sounds like a foreign language, please let me know in the comments below. I will try my best to answer your questions. I also have a beginner options trading series where I break down exactly what I'm doing when I trade options. I will leave those videos linked in the description below. And that's it for the options trading update for the week. I also didn't sell any stock, so let's quickly go over my purchases. In the last F.I.R.E Fund update, I predicted this week would be a buying spree, and I was right. I spent much more than usual, but still a lot less than I thought I would, partially due to the fact that most of my money was tied up as collateral in QQQ. So I started this week off with the 4 shares of SPYG. I thought I got a good deal on it when it dropped to the $71 range, but on Friday it dropped into the $68 range. I was going to pick up more, but by the time I realized the market had closed for the week, so I'll probably pick up a few extra shares next Monday. The 4 shares I picked up brings the total in the portfolio up to 71 and increases our annual total dividend income by $2. After that, I saw that Chimera Investments also dropped into the low $16, high $15 range, so I picked up 14 shares for about $225, bringing the total in the portfolio up to 94 shares and increasing our annual dividend income by $19.20. Last week, I bought a fair amount of NUSI, RYLD, and QYLD, but looks like I entered way too early. We can't time the market, and buying in is like catching a falling knife while the market melts down around us. But I dollar cost average all the way down. One trick is to wait until midday to late into the trading day to let the market fall a good amount before buying in to get a slightly better price. I never really want to enter right at market open due to the volatility. It's kind of hard to see where the market might go. Either way, I went really heavy into these positions this week. Starting with my least favorite of the bunch, I picked up 9 shares of NUSI as it fell from its all-time high, bringing the total in the portfolio up to 94 shares and increasing our total annual income by $8.41. Then, I spent most of my budget for the week on 24 shares of RYLD for just under $600, which brought the total in the portfolio up to 152 shares and generating a whopping $68.64 of annual dividend income. There's a reason that this is my favorite cover call ETF. And lastly, I spent just under $400 to buy 17 shares of QYLD, bringing the total up to 139 shares in the portfolio and generating $48.10 of annual dividend income. I was able to bring my cost basis down on all of my cover call ETFs, so I would say it was a pretty good week of buying. So this week I spent a total of $1,588.49 on stock, which increased our annual dividend income by $142.84, which I think is our largest weekly dividend increase ever. The week's purchases also increased our total annual income up to $2,865.94, a 5.25% growth over last week, and bringing us 1.19% closer to our goal of $12,000 per year of annual dividend income. We are closing in on the 25% mark, almost a quarter of the way there to our goal. When I started this series, I was only about 10% of the way there, so we've come pretty far in the last 5 months. It really does take time to build up a portfolio like this. It will take me years to reach my goal. But if you guys have seen my passive income report this month, you will see our dividend snowball is growing quite quickly. Also keep an eye out for our dividend portfolio update coming out in the next few weeks, and we can see our dividend and portfolio growth over the last few months as well. So that's it for another Fire Fun Friday. Please guys, if you have any questions or comments, please leave them below. I really do want to hear from you and see how your journeys are going. Thanks for watching, and I'll see you guys on the next one.